All right, so today we're going to take a deep dive into this EquiTrust MarketPower bonus index annuity.
Okay.
This is based on some stuff that you sent over from Diversified Insurance Brokers.
Right.
And, a lot of our listeners are always looking for ways to, potentially grow their money for retirement, but they also want to protect what they've already saved.
Yeah, absolutely.
So we're going to try to unpack this and see, what we can learn about this particular product.
Sounds good.
So first off, what is a fixed index annuity? Because that's kind of at the heart of this.
Yeah, so it's basically, it's a way for you to participate in the market upside without taking the risk of losing your principal.
Okay, so you get some of the benefit of the stock market going up, potentially.
Right, exactly.
But you're not going to lose money if the market crashes.
Exactly, yeah.
Okay, so let's look at some of the specifics of this particular product.
Okay.
It says there's this 10% premium bonus right off the bat in the first year.
Right.
What does that mean? Like, what does that look like in practice?
So basically, if you put in, let's say $100,000,
Right.
your contract value is immediately going to be bumped up to $110,000.
Oh, okay. So it's like a little thank you for investing with us.
Exactly. Yeah, it's a nice way to start off.
Mm-hmm. Okay, that makes sense. And then let's talk about the growth potential, because obviously that's a big part of this.
Yeah.
It talks about all these different index crediting strategies and all these different indices like the S&P 500.
Yeah. So
What does all that mean?
basically the way it works is your potential growth is linked to these indices. So like you mentioned, the S&P 500.
Okay.
There's also the Barclays Focus50, which is a little bit more selective.
Right.
And a few others. But instead of directly investing in those indices,
Right.
they use these strategies to calculate how much you're going to earn.
Got it.
Some of them use participation rates, which is just a percentage of how much you're participating in the growth.
Right.
Some have caps. So there's like a limit on how much you can earn. But the important thing is that no matter what, your principal is protected, so you can't lose money.
So even if the market goes down, you're not going to lose your initial investment.
Exactly. Yeah.
Okay, so it's kind of like a way to ride the market up without taking the risk of going down with it.
Exactly. That's a good way to put it.
Now, what if you need to access the money before the end of the term? Because these annuities usually have a set period of time, right?
Right. So with this one, you can actually access up to 10% of your account value every year after the first year without a penalty.
Okay, that's pretty good.
Yeah, that gives you a little bit of flexibility.
Okay, and are there any other times when you might be able to take money out without a penalty?
Yeah, there are certain situations like if you need to go into a nursing home
Okay.
or if you have a terminal illness, they will waive the surrender charges.
Okay, so those are some exceptions.
Yeah.
But if you take out more than that 10%, or if it's not one of those situations,
Right.
you might have to pay some fees.
Yeah. Yeah. You could have surrender charges, which are basically fees for taking your money out early.
Okay.
And there's also a potential market value adjustment,
Okay.
which means that the amount you get back could be higher or lower depending on what the market is doing.
Interesting. Okay, so, there's some flexibility, but there's also some potential downsides to taking your money out early.
Right. Exactly.
Okay, let's talk about retirement income, because obviously that's a big part of what people are thinking about when they're saving for retirement.
Right.
This product has an optional income benefit rider.
Yeah.
What is that and how does that work?
So it's basically designed to create a stream of income for you in retirement.
Okay.
And one of the key features is that it has a 6% annual roll-up for up to 10 years.
Okay.
So that basically means that even if the market isn't doing well,
Right.
the base that they use to calculate your income is still growing.
Also, it's like a guaranteed minimum growth rate.
Exactly. Yeah.
Yeah.
It gives you some peace of mind.
Okay. And then there's also this thing called the enhanced income withdrawal.
Yeah.
What is that all about?
So this is a really important feature if you end up needing long-term care.
Okay.
Basically, if you become chronically ill and you can't perform at least 2 of the activities of daily living,
Right.
they will double your income payments for up to 5 years.
Wow. So that could be a really big help if you need extra money for healthcare costs.
Exactly. Yeah, it's a nice safety net.
Okay, so what happens at the end of the contract term? Let's say, you've had this annuity for however many years it is.
Yeah.
What are your options at that point?
So you have a few options. You can renew the annuity with potentially new rates.
Okay.
You can convert it into a stream of income, or you can just take the whole thing out without any surrender charges.
Okay, so you've got some choices.
Right.
And what happens if you don't choose anything?
Usually it will just renew automatically.
Okay, so you don't have to worry about it lapsing or anything like that.
Right.
Now, what about beneficiaries? Let's say you pass away. What happens to the annuity?
So your beneficiaries will get the full accumulated value of the annuity without any surrender penalties.
Okay, that's good to know.
Yeah, and if your spouse is the beneficiary,
Right.
they often have the option to continue the contract.
Okay, so kind of carry on.
Yeah.
That makes sense. It mentions here that EquiTrust has a reputation for financial stability.
Mm.
Why is that important for someone considering an annuity?
Yeah, so with an annuity, you're basically relying on the insurance company to be around for a long time to make those payments to you.
Right.
So it's really important to choose a company that's financially strong and stable.
Okay, so you're saying EquiTrust has a good track record in that area?
Yeah, they do.
Okay, so for our listeners out there who are thinking about their retirement plans, this annuity seems like it offers a potential mix of growth potential with some downside protection.
Yeah, absolutely.
And then you've got the income options and some liquidity if you need it.
Right.
It's all about finding that balance.
Exactly.
So today we took a deep dive into the EquiTrust MarketPower Bonus Index Annuity, thanks to the information that you shared from Diversified Insurance Brokers.
Of course.
And we saw that it's a financial product that aims to give you some market-linked growth, but also protect your principal,
Yeah,
and has these features for income and liquidity.
absolutely.
But now I want you to think about something.
Okay.
We talked about all these different index crediting strategies,
Right.
all the different ways that your potential growth can be calculated.
Right.
How do those align with your own personal risk tolerance?
Yeah.
How comfortable are you with the possibility of the market going up or down? And how does that fit into your overall retirement timeline?
That's a great question.
What are the trade-offs that you're seeing as you look at those different options? And as you're thinking about that, we're going to wrap up this episode of The Deep Dive.
Sounds good.
Thanks for listening.
Thanks for having me.